the dollar depends on the faith, if you like, that people have in it. The faith and the credit in the US government. So, when that collapses, then there may be a change. And I guess that the change will not be a new BRICS currency, but what it will be, I think, is for defensive reasons, China and Russia putting their currencies onto a gold standard. Now, whether they do it properly or not, we'll have to see at the time. I mean, it's very, very simple to do.
Leading investment bank JPMorgan has examined the outlook for the US dollar amid the global de-dollarization efforts led by BRICS nations. Developing countries increasingly seek to bolster their economies by conducting trade and transactions in local currencies, which could reduce demand for the USD in the foreign exchange markets and potentially impact its value through shifts in supply and demand. Alasdair Macleod argues that the concept of a new BRICS currency is improbable. For example, he points out that the US dollar depends heavily on public confidence in the US government's credit. If this confidence were to erode, it could lead to significant shifts. However, rather than introducing a new BRICS currency, Macleod believes it is more likely that China and Russia would respond by backing their currencies with gold as a protective measure. At their October 2024 summit, BRICS nations reaffirmed their commitment to creating an alternative payment system to lessen dependence on the US dollar in international trade and enhance economic independence among member states. During the summit in Russia, a widely circulated image on social media claimed that Russian President Vladimir Putin had announced a new BRICS currency to rival the dollar. However, this claim is misleading. Putin focused on advocating for a financial system that promotes international trade using local currencies instead of the US dollar. Alasdair Macleod observed that Russia faces particular challenges within BRICS due to its role as a significant exporter of energy and commodities, with limited imports to balance its trade. Macleod believes the idea of a BRICS currency is now off the table, suggesting that any significant currency shift would more likely result from a collapse in Western currencies. Instead, BRICS nations are focused on establishing a self-sustained economic ecosystem that operates independently of Western capital markets for trade and commodity exchanges. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
The new BRICS currency is not going to happen. Forget it. I think we just dismiss all talk about it. If anything happens, it will be as a result of the collapse of our currencies, because our currencies are credit. As someone said before a congressional committee a long time ago, the dollar depends on the faith, if you like, that people have in it. The faith and the credit in the US government. So, when that collapses, then there may be a change. And I guess that the change will not be a new BRICS currency, but what it will be, I think, is for defensive reasons, China and Russia putting their currencies onto a gold standard. Now, whether they do it properly or not, we'll have to see at the time. I mean, it's very, very simple to do. That's the important thing. Now, in terms of any comparison between the European Union and BRICS, the big difference is that the European Union is a political union, whereas BRICS is in effect a trade union. It's a union based on if you like, free trade between the members. That's the whole point of it. And principally, it's not just free trade, but also the recycling of investment to improve the infrastructure in these countries, allow for the extradition of commodities and all the rest of it. I mean, for example, the building of a railway from Mombasa on the East African coast all the way through to the Congo is all about shipping out sort of things like cobalt and copper and all these wonderful things that are being discovered in the Congo. In return, of course, the Chinese, are importing capital in, so the currency thing doesn't really matter in a sense. What they're doing is they're importing capital into places like Kenya, Uganda, Belgium, the old Belgian Congo, the Congo, Central African Republic, and so on. The idea basically being that by improving communications, by opening up the country properly, investing in it, then everybody's going to benefit, including China. The only country with a problem in this, I guess, really, is Russia, because Russia is a huge net exporter of energy in particular and other commodities, does not have imports that match. So she is always having to import other currencies, which is the result, if you like, of her sales of energy in particular. So she's up to her neck in Indian rupees, for example. Now, that's not a very happy situation for Russia. And I think that's why Russia was actually quite keen to push the idea of a gold-backed BRICS trade settlement currency back in August last year, ahead of the Johannesburg summit. But that is now a dead duck. That's not going to happen. If anything happens, it will be as a result of the collapse of currencies in the West. The other thing, to respond to your listener's question, viewer's question, really what they're trying to do is they're trying to assemble a parallel world, if you like, to the West, so that instead of the IMF and the World Bank, you've got the New Development Bank, which will do similar functions. They're planning, and this was announced at Kazan, they're planning, new precious metals exchanges, wheat exchanges. They're looking at other commodity exchanges and all the rest of it. So the idea basically is to build a complete parallel structure so that they don't rely on Western capital markets to sell and acquire commodities and all the rest of it.
Gold prices continue to rise, bolstered by mounting U.S. debt and elevated yields, which could sustain the precious metals' bullish trend. Already up over 30% this year, gold's upward momentum shows potential for further gains. Meanwhile, the U.S. government has been restructuring domestic debt by paying down high-cost, short-term loans from commercial banks and issuing new, lower-interest long-term debt. This strategy aims to ease the financial strain of interest payments to banks. According to Alasdair Macleod, the Federal Reserve and other central banks will likely respond to banking crises by expanding their balance sheets, buying government debt, and printing money to stabilize vulnerable institutions. While these interventions protect banks, they erode currency value. Macleod notes that this approach has driven a strategic shift among global central banks, especially in Asia. Recognizing the weakening credibility of the dollar and other Western currencies, these institutions are quietly amassing gold reserves as a defensive measure against potential currency devaluation. Now, let's redirect our attention to a video.
Banks are dealers in credit, and their balance sheets are leveraged, if you like, on equity. And it's wonderful if you've got, let us say, a 2% margin when you take into account all the costs and all the rest of it between what you lend out and what your depositors get. 2% fine, gear it up 5 times, that's 10%, gear it up 10 times, that's 20%. I mean, they're trying to get something like 25% return on equity, or maybe even more through this leverage. You can see how they get to that point, if you like. As the economic conditions appear to improve, then they increase their leverage. The other thing that has happened this time round is that as the central banks have reduced interest rates to the zero bound, or indeed into negative rates, what it's done is it's compressed the bank's lending margins, the difference between their asset returns on assets, which are loans up to whoever, what they give their depositors, if anything. And that squeeze in the margins, their response has been to increase their leverage in order to protect the bottom line. There is a payback at that. When interest rates start rising, as indeed Silicon Valley Bank found out, the whole thing goes into reverse, and very quickly you go bust. And this is how this is going to be dealt with is going to be a very interesting question. I suspect because a primary duty of the central bank is to protect the integrity of the commercial banking system, the expense of this will be shown in the currency. In effect, the rescue will involve the Fed buying government debt. It increases its balance sheet, it increases banks' reserves and all the rest of it. And not only that, but there will have to be rescues, which basically involve the printing of money, inevitably. I mean, that's printing of money is the way people put it, but it's the other side of debt purchases by the central bank. It's the other side of QE. The other side of QE is cash chucked into the economy. They're going to have to do something similar to that, with a rather different angle. Instead of rescuing government finances, and keeping interest rates suppressed. It'll all be about keeping interest rates suppressed and rescuing the banking system. When you got someone in a debt crisis and the whole thing's failing, and it's likely to trigger complete financial chaos, why have anything in it? Just get the hell out. And the only way you get the hell out is to get out of credit and get into real money, which of course is gold. And that is the message that central banks around the world now understand. They may not admit it, but basically that's why. Most of the central banks, and okay, not the major ones aren't admitting to anything. They're just keeping very, very quiet. All the Asian central banks and government funds and, all these sort of hidden bits, they understand completely what's happening to the credibility of the dollar and all the other Western currencies. And so they're getting out. That's really led to demand for gold. And it's just cleaned us out of any gold liquidity, or it is cleaning us out of any gold liquidity.
The US dollar continues to hold its status as the world's primary reserve currency, with no significant rivals on the horizon. It's involved in 88% of global FX trades, comprises 60% of all foreign currency reserves, and facilitates over 80% of global oil transactions. However, BRICS nations are visibly moving toward de-dollarization. The share of global foreign reserves held in USD has dropped from 70% a decade ago to 60% today, a shift influenced by factors like the US-China trade tensions and the freezing of $300 billion of Russia's reserves following its actions in Ukraine. These developments suggest a re-emergence of distinct economic blocs, with many economists suggesting that the era of globalization is shifting toward a more fragmented global landscape. Are you comfortable using local currencies for international transactions? What challenges do you foresee in making this transition? We value your thoughts, so please share them in the comments. If you found this content valuable, please give it a thumbs up and remember to subscribe to stay informed. Thank you for being part of this journey with us.